So, welcome and thanks very much for attending our session. My name is Rohan. I am the Global Head of Operations at Wise. Wise, hopefully most of you know, is a international money movement company where we specialize in accounts, international money movement, and we have over 700,000 businesses and over 16 million consumers using our platform. I'm joined by my esteemed founders here, Dimitri and Lukas, and I'll get them to introduce themselves in a second. But just to give you a little bit of context on what to expect for the panel today, we're three businesses that are inherently international. So we operate across the world, both in Europe and the US, and we'll talk a little bit about how we think through funding, and how we think through where it might be best to get investors between the U.S. and Europe. It's founder-led companies, all of us, at different stages of growth, but all growing and scaling pretty quickly. And you'll get different perspectives on U.S. versus Europe investors and the pros and cons of each. And the interesting thing as well is we are also, especially these two, are AI native companies and using AI. So we'll talk a little bit about how that plays into investor rounds. So maybe Dimitri, if you don't mind introducing yourself and a little bit about Gradient Labs.
Yeah, absolutely. Hey everyone, I'm Dimitri. I'm the co-founder and CEO of Gradient Labs. I'm going to speak slightly louder. We're a conversational AI platform that serves banks and fintechs. So whenever you contact, let's say, a bank and say, hey, why was this transaction declined? That could be us on the other side, kind of trying to help you with those types of queries. And we are an AI native company going now since 2.5 years, Series A, and have raised our last round in the US. So I guess that's kind of the contribution to the talk, and have both investors from EU and US and kind of can share perspectives later on this.
Great. Thanks, Dimitri. Lukas?
Hi, I'm Lukas. I'm founder and co-CEO of Unite Labs. We are a Munich-based startup, and we are building what we call the operating system for the lab. So our customers are like pharma, biotech companies. And why is this relevant in the age of AI? We make everything in the lab accessible for AI. So we have bidirectional integrations to all of the instruments, to all the data, and that enables AI to actually tap into all of that data, but also to actually run a complete lab. And yeah, this is something that is currently not possible. So our customers are very strong in the AI field. So they build AI agents, AI automation engineers that actually run executable code autonomously for the lab of the future.
Great. Thanks both. Okay, so let me maybe start with, each of you have had different journeys so far in terms of your fundraising. Dimitri, you chose US investors. So maybe you can start a little bit of, was this intentional? And you can talk a little bit about the journey of finding your US investors for your Series A.
Yeah, that's a good question. So it was actually not intentional. We were kind of just up for UK investors or US investors. I think it was a lot more about kind of the personality and the fit with the fund in our case. So in our case, we really kind of connected with the investor that ended up investing in us, and kind of it was the same brainwave. And you could see it during the fundraising round that they were able to commit within less than a week, but that's how fast US investors actually move. But in hindsight, we realized how much of a difference it actually made, at least from our perspective. So it was a Red Point in our case. It's a West Coast US investor. And I think they came in with a lot more kind of aggressive mindset in a sense of how quickly we could invest into the business, because we are in a very, very competitive landscape, right? So we are building AI agents for fintechs. It's not a slowly pick your niche and solve a problem over 2 years, right? It's like, it's a market grab in a way. And we had a very, very different mentality about it. And they just helped us kind of to really understand that that's not the market that we're in. And so from that perspective, it was very, very useful to have a US investor that kind of thinks much bigger, faster, more ambitious.
And Lukas, you guys are, as I understand, 50% EU, 50% US in terms of your split. But for your pre-seed, you chose a European investor. And talking to you a little bit, some of this was actually intentional, at least for the pre-seed. Can you talk a little bit about your journey as well as what's coming next around potentially looking at US investors?
Yeah. Yeah, so when we looked at our funding round, there was a lot of back and forth whether we should go for US investors or European investors. We had a lot of inbound requests from the US from customers because there's this huge AI wave. There's a lot of companies in the biotech XAI space, and they're moving incredibly fast. And then there's us as a European startup building kind of deep tech and software, because what we're building is so elemental to the infrastructure, to their R&D, because if we don't run, nothing runs. So with that, keeping that in mind, it's like we knew that, okay, we're not going to be able to scale this like from day one. And we had the feeling that in the US, all of those investors, they were always already talking about scaling a sales org when we don't even really have a really robust product in our customer base. And this was basically one of the reasons why we realized that we felt like there was not the understanding for the product that we are building and the market we had, which is completely built on trust, was something that was troubling us, because we felt that they would very much push us towards that. And we've seen other startups in this space fail just for that reason, because they were scaling too quickly, burning the trust, burning customers, and burning their reputation in the market because of that. And at the same time, one of our major focuses was actually to get investors on board that also had a founder experience, because we're very early. So we had a pre-seed with 2.8 million, which is a lot for a German comparison. But we wanted people that actually understand our journey, that are from our field in a way, that understand the tech, that understand the market, and are okay with us building another 1.5 years, our product and our relationship with those customers, before then going to another round where we then say, okay, now we can actually scale this customer segment.
Makes sense. I can share a little bit about Wise as well. I mean, for those of you who know us well, we've been around for now 13, 14 years. And as we were going through our journey, we were actually quite agnostic about where the initial funding came from. We had European investors, UK investors, US investors. But as we thought through our business model, which was we're inherently international, and we actually have customers all around the world, and we're building the infrastructure and the accounts for businesses, consumers, enterprise customers all around the world. It was never actually a key focus on saying where should the investment come from. But through our listing process, when we listed in London, and many of you have seen now the plans to go dual list in the US, we have thought a lot about where is the market penetration going to come from in the US, and how will the investor community be able to help us expand and grow in the US. And so just thinking through both of your journeys as well, and the next stage of expansion into the US as well, do you think it's important to have investors who help give you boots on the ground and access to the network there? Maybe Dimitri, you can start.
Yeah, I'm happy to start. In our case, we chose a GTM-focused investor because that's kind of where we felt our, not weaknesses, but where we could have a lot more kind of progress and help from others. So really our investors were GTM-focused, and I think where we get a lot of value from them is actually introducing us to very, very top talent on the GTM side, top salespeople, top marketeers, and really that's where we get a lot of value from them. However, I've also realized, since we actually now started building out the US office and US presence, is that especially if you're like very sales heavy enterprise sales motion, like if you don't have boots on the ground, nothing will ever happen there, right? So, and I think it really, like, having this US investor helped us to realize that we can have progress much faster there, and we see that already happening. So we have the first sales, or our head of sales now based in New York, and the first couple of account executives, and it's really kind of, you can see it pick it up a lot easier and faster than me trying to sell from the UK. And up until probably 6 months ago, I was a bit oblivious and naive. I was like, surely I can do it from here. No, I can't. And so that was probably very helpful in our case.
Cool. And how about you, Lukas, as you think through the next stage of investment and boots on the ground there in the US?
Yeah, so half of our customers are in the US, mostly Boston and soon to be also San Francisco. And with our product, we need some boots on the ground. So this is something that we are actively doing right now. So we're interviewing first people over there, and we will very likely set up an entity there next year. And right now we're planning our next funding round in Q1 next year. to actually start things there. And with that, we would like to stay with a lead in Europe for that understanding and the pace and so on. But for the round after that, we already want to set out the groundwork because we believe that if we have follow-on investors that have a network over there, overseas, in the UK and the US, that will significantly help us for a follow-on round after that. Because we do see that gap here in Europe, that there may not be enough funds that can actually follow on at that level. At the same time, we may need to raise faster because those companies in the US, there's some of our customers, they raised billions. And in that case, they're also expecting us to grow at a reasonable rate. And this is actually, giving us kind of a nudge to move to speed up as well. And we believe that a little bit of that could come from the US as well. But it's mostly for laying the groundwork for the Series A round then.
So both of you are AI native companies, and it would be remiss of me not to talk about AI and some insinuations that U.S. investors are far, far more bullish on AI. Some would even say we might be in a bubble. How do the two of you think through this? So I guess maybe two questions on this. Do you think that U.S. investors are more bullish on AI than European ones? One. And how does that influence how you guys think about your investor landscape? And two, do you think we're in a bubble in terms of valuations?
Yeah, maybe the second one. I don't think it's a bubble. I think it's a boom for sure. But I mean, we have already proven and seen how much value you can create. I think that point is already proven. What's not proven yet is like how quickly can you disseminate it and adopt it within the industry. So I do think the value is real this time around compared to kind of 2000s boom and bust. But certainly some companies will fail though, because I do think valuations right now in our space are crazy and potentially sometimes not justified. And by the nature of it, some of them will really succeed and some of them will really fail. So rather a boom than a bust. Sorry.
Yeah, and if I may follow up on this, Dimitri,
Sure.
You talked to me a little bit about how U.S. investors are really quite a little bit more aggressive and pushy on your growth trajectory. How do you think through that in terms of how U.S. investors think about AI native companies?
Yeah, I think it's just the benchmark has really changed what is expected, right? And what we can see in the market. So if it's previously was kind of considered good to have $1 million ARR in the first 12 months of monetization, now it's 5. Right, so that's a benchmark all of a sudden. So, and if you're doing only 1 million, it's kind of considered okay-ish. And so really, until you see that there are many companies who are doing 5 in enterprise sales in the first year, like you kind of don't change that mindset. But the benchmark has certainly changed. I think that's what we have learned over the last 6 months is that the target is not 1 million anymore for sure.
How about you, Lukas?
I would agree. I think it's more boom than a bubble. I think what AI is making more apparent is that there are a lot of things that are not done right in larger companies. For example, data. You need good data, and this is basically because of AI. This suddenly becomes apparent that you need to change the way you collect data, the way you store data, you enrich it. And on our end, we see a lot of companies pouring a lot of money into that, which is like a sustainable thing that they should do anyway. But now suddenly they have this almost excuse, well, we have this argument AI, and suddenly the money is available for something that is sustainable and should have been done anyway. But people in those companies couldn't really do the ROI calculations for it because it was too complex and too abstract. So a lot of the money that is being spent on something that should be done anyway, and AI is the justification for it. So I think it's not wasted, and we also see that with our customers. They are setting up infrastructure for the labs the way that a lab should look like, the way that a lab is the most efficient, the most productive, has the highest throughput, and they're doing it. And if there's an AI model that is suggesting a ton of new drug candidates, great. But now suddenly they're actually investing in the right things that are also sustainable. So even if the company goes down under, that investment hasn't been in vain.
Makes sense. So thinking through both of your I'll pivot a little bit. Thinking through both of your fundraising journeys. So Dimitri, you raised 13 million in your seed funding, and then Lukas, just over 3 in your pre-seed. So in your Series A and then your pre-seed. Thinking through how you got access to those funds, and as you thought through the accounts you needed to open, and making sure that you were getting the best rate of return on the FX transfers or being able to use the money. How did you think through this? And little plug here, both are Wise customers, Wise business customers. And so how did you choose to use Wise, and why do you think that this was important as you were thinking through getting your funding?
I think there were a couple of factors. A was convenience. It was just very difficult to even consider opening anything else. We had already a Wise account. It was super easy to open. And because it happened also so fast, right, that we raised in the US, it was actually like less than a week where the fundraising was closed. And it was convenient. But also because we were using Wise even before for UK transactions, and we knew that Wise actually offers the best rates on conversion. That was kind of a very easy choice. I think the interesting thing that happened with us is all our spend is in GBP, but money is in USD. And even though I have financial background, actually what we didn't realize, or like what I didn't think about, is like how much FX risk there actually is. So at the time when we raised, the US economy was at one stage. 3 months later, we lost like $1 million purely due to FX rate. You obviously don't bake it into financial forecast, but I think if doing it again, I would probably think a little bit more about how you actually manage for FX risk as well. But like those details, you probably don't care as a founder when you raise.
And do you think that so you talked about the fact that you chose us because of the FX rates. Who else did you look at out there? And what did just generally opening the account and moving the money give for you? And how was this beneficial?
Yeah, we do have an account with Monzo as well, for what it's worth, but they don't offer that flexibility in different currencies. So that was kind of a no choice really for this. Revolut was chasing us very, very heavily, maybe a bit too aggressively for my taste on my LinkedIn. So that was more like from a sales perspective, almost a no-go for us, unfortunately. But really, there's like a few accounts that you can choose right now, but really not much choice. Like if you really want to have the best account, there's like very few providers that you can go with.
And how about you, Lukas? I guess you were raising in euros. You may be raising in dollars in the future, your different currencies. How do you think through FX, and what was your journey like using us?
Yeah, so looking at our customer base, because we don't just use it for the investment part, like there's Switzerland, Basel, there's Denmark, there's the UK over here, then there's Boston and San Francisco. These are the 5 main hubs. And right now, if our customers are there, then ideally we actually, they pay in their currency right now. And then since those are the clusters, this is also where we are hiring people at some point. So there's a lot of back and forth conversion, and we can't always make sure that actually, we get that money from that contract in at the same time that we have to pay our employees there. So having the ability to change quite flexibly there is quite important for us. And for now, for the last funding round, it was almost exclusively European investors, mostly Germany, Spain, and that was it. But in the next funding round, we are planning on having some follow-on investors also here from the UK and from the US. And then I suppose that, it just makes sense to, be able to have that money backed over there as well and being able to access it quite quickly.
And I think that's kind of our main proposition as we think through the business account site. We have over 750,000 businesses using us. And the idea is a lot of businesses are inherently international. Probably many of yours are as well. You have suppliers, you have employees, you have payments that you need to make all around the world. You get seed funding in different currencies. And so getting ripped off on your FX rates and making sure that you've got a platform that can do this and you can focus on running your business is really important. So just thinking through, you're both founder-led. You're thinking through investors or accounts or generally the ecosystem. How important is it for those who invest in your company or the accounts that you use to understand the founder journey, what it's like to run a business? How much attention do you pay on these things when you're looking at investors, when you're looking at accounts, when you're looking at just generally the people that you work with?
You go first.
You want to start? Yeah.
I mean, for our pre-seed round, we had a lot of VCs that wanted to invest, and it was an incredibly tough choice because the first one that gave us a term sheet was perfect, almost too good, and we thought, like, all right, what's wrong with them? Where's the hook? And we spent like 2-3 weeks kind of like pushing them back and back because we thought like something must be wrong here, because they're also founders themselves. Nap, formerly Cavalry Ventures, the founders from Delivery Hero, based in Berlin, and they had this experience. They were founders themselves, so they knew exactly what we were going through. If we had any issues, we can contact them anytime. They made really good intros. They have a great network, and they actually execute on that. So we meet up with them like every other month, at least every second month. We see them in person. And whenever we need some advice, they can help us. Or if we need someone, they know someone who can help us. And they're actually very, very active and understanding because they've been through the journey. So this was very important for us doing the pre-seed round. And I think during the seed round, this is still valid. We still want people to have that experience. But I think the higher you go up in your rounds, the less you will get that, and the less the focus will be on that. Because as soon as you speak internationalization, you will have different issues. You will need different networks, different advice, and I believe that at that point, like this founder journey may not be as relevant anymore.
Yeah, for sure. Yeah, in our case, like in general, we preferred looking only. Well, like we looked only for investors at Series A, which we already had warm relationship with. We did talk to others as well, but what we found is kind of building that relationship up front is really what makes a difference. And those were the only ones then who actually wanted to proceed quickly with us. Yeah, in terms of the founder journey, I'm not sure how much they shaped of that. Probably not so much. So at least in our case, even though the first investor was Local Globe here for our seed round here in the UK, and they're really, really focused on investing into founders, and they kind of really gave us space initially to build the product, really find our time till it fits the market. So essentially what you were, Lukas, talking before about. So it was a really good seed journey in a sense of they were not pressuring us into any direction at all.
Very cool. Okay, I'm going to pause the three of us talking. I'm sure we could talk at length about lots of different things and open it up to questions from the group. Sure, we've got many different founders, investors here. The question was for Dimitri in terms of what are the biggest differences between US and Europe investors and operating on the ground? Is that right? Yeah.
Yeah, in terms of how you're trying to take the market between EU and US, what's the biggest differences there?
Yeah.
Yeah.
And has like fundraising with the US changed the focus towards being more US heavy?
Yeah, I think the biggest surprise in our case was, a bit of a shock really, how expensive US is. So really, no matter what roles you're hiring for, whether it's engineers, sales, marketing, I said it's only for engineers, you really need to plan with double everything. So our head of sales costs like $500,000. Like that is those sums, like all the comp with variable comp, right? But those are numbers that you would never hear in the UK and Europe. And obviously, because we were quite inexperienced going into it, we did not budget for that in a sense of like, here's the financial plan, and kind of consider that US will be just double as expensive on everything. So that was probably the biggest shock. In terms of how those countries operate, we do see a lot of a difference there. Like, just to give you an anecdote, if maybe it's funny, like one of the bigger financial services there, we were talking to them about our product, and they were at some point saying to like, Dimitri, can we do it without a contract? I'm like, sure, like I don't need a contract with you because you need to cover your bases for, I don't know, data protection, everything. So it's really for the companies, but really for them, it was like, we just want to do it quick. We don't need a contract here. We don't need to like legal frameworks. I'm like, cool. If that's what you want, we can do that for you. But in the US, it felt to me also maybe they just don't know what they're doing. that might have been the case as well. But it's just a lot more aggressive, a lot more risk-taking, a lot more speed in those things as well. So you can onboard customers much quicker in the US, I found.
Great. Other questions? I think we have one back there.
Right. That's going to be okay. So,
Hi guys, just a follow-on question. If you actually are sending people to the States, presumably you've identified a significantly larger addressable market, and particularly if there are significant costs, then are you considering sending a founder to the States to drive that expansion?
Great. Okay. So the question was, you probably couldn't hear it. The question was, as you're thinking through expanding into the States, would you go and send a founder out to the States on the ground in terms of significant market expansion? How do you think through that? Maybe Lukas, you can cover this because you've got some big plans to go out in the US. Are you going to move out there?
Yes. I mean, either me or my co-founder, Robert. Yeah, I guess we have to. One of the things that we've learned so far is that also the culture that we build up over here, you have to bring over there because otherwise that company just becomes its own thing. And yeah, there's examples in the market where sometimes that part actually then kind of starts taking over and you kind of lose control. So ideally you go there, not even by yourself, but even ideally take someone with, also to live the culture and get everybody onboarded.
Great. Thanks. I think we have time for one more question. Yep.
yeah, I think
Perfect.
Hi, I'm Shai. I have a question for both of you guys. I'm wondering, like, because we are just starting raising funds, if you were in my shoes back then, like, would you choose US fund first or you choose Europe fund first?
All right. So I don't know. I think everyone's got headphones on. I think everyone heard it. Would you choose US or Europe funds first?
I would probably not well, in our case, we didn't make that decision up front. I think a lot more important for you is whether you connect to that person on the other side who will be your managing partner, who will be part of your board, who you will work very closely with, right? So if you don't have a good connection to them and you don't feel like you're getting energy out of being with them, it's going to be a drag. So at least personally, that's but like there's probably no true or false or like no one way of doing it. I optimize for like being able to work with people and just enjoying that because you do that a lot with them. And then the country. In hindsight, though, if your plans are really, really clear how you want to expand in the US and it's really, really big on your agenda, then I would bias towards US funds because it's just going to be so much easier in terms of the advice that they will be able to provide to you if that's really kind of high on your agenda.
How about you, Lukas?
I would probably go to the EU again and fundraise here. But this really depends on what the product is that you're building, what your primary market is. So if you build something that you can scale immediately, then go over there. But expect them to tell you, well, why do you want to raise 5? You could raise 10. And they will always try to push you up. At least that was our experience. And that's only worth it if you know what to do with that money. And if you actually can keep that pace, because otherwise you just overvalue yourself and then you pay the price in the next round. So it really depends on the product. And then from my personal view, like I really want to connect with the people. And if there's this even like the slightest odd feeling that I have, then yeah, I wouldn't go for it. Because it's a lifelong journey. Like you're not in it for like a couple months, you're in it for years. And if there's bad blood between the two or a misunderstanding, then that will keep you on your toes for years and drag you down.
Excellent. Okay, I think we've run out of time, but big thank you to my fellow panelists. All three of us will be around for the rest of the day if any of you are interested in chatting to any of us. And as you're looking at accounts, whether you're founders or startups or investors, remember that you often get ripped off on FX exchanges, and this is not negligible. And the Wise Business Account really is here to solve a lot of these problems, and we're very, very founder and startup friendly. So thanks very much, guys. Really appreciate it, and thanks to you all for participating.